Want to stay ahead of fraudsters and across the latest scams? At Which, we helped prevent an estimated £1.8 million in scam losses last year thanks to our Scam Alert newsletter. And each week we provide more information on the latest scam activity, helping protect you, your family and your friends. Stay in the know and avoid falling victim to scammers by joining over 450,000 people already signed up to our free Which Scam Alerts. To join them, head to which.co.uk/scamalert and sign up today.
Hello and welcome to Which Money Shorts. Inspired by our Which Shorts podcast, these episodes will drop every other Monday and bring you a taster of some of the best money advice taken straight from the Which Money magazine. These episodes are narrated by me, Lucia Ariano, host of the Which Money podcast, and we'll be back with your regular money podcast episode this Friday. Now in this episode, we're looking at a lesser known aspect of fraud, money mules, and the significant role they play in the fraud chain. This article was originally written by Chiara Cavalieri. Money mules are a crucial link in the fraud chain, and while they are criminals in the eyes of the law, many are completely unaware of their involvement. You may know one, or you might even be one yourself. So what exactly is a money mule, and what are the warning signs that someone you care about has been recruited? Put simply, a money mule lets someone else use their bank account to transfer illicit cash. This is often gained via horrifying operations from online fraud and drug dealing to human trafficking. Networks of mule accounts are used to shift around £10 billion each year in the UK, according to the National Crime Agency, NCA. Funds are typically flushed through multiple UK accounts, international accounts, and increasingly cryptocurrency exchanges. Not all money mules are complicit. Many are victims of fraud themselves, while others may be forced or tricked into letting criminals use their bank accounts. However, the implications of becoming embroiled in money laundering are severe. 1 in 5 adults aren't aware money muling is illegal, according to a 2023 survey by the fraud prevention agency CFAS. Yet it carries a prison sentence up to 14 years. Money muling disproportionately affects younger people who may be less aware of the consequences and are heavily targeted on social media. Nearly 2/3 of bank accounts indicating mule behaviour in 2023 belong to those who are under 30, although many mules are older. While older mules are more difficult to recruit, they are inherently more attractive to criminal gangs. This is because people aged over 40 have usually held their bank accounts for many years and are less likely to arouse suspicion. The government promised its biggest ever crackdown on money mules earlier this year in a bid to fix the UK's reputation as the money laundering hotspot of Europe. Banks and law enforcement take into account whether someone was tricked into becoming a money mule when deciding how to deal with a case. However, even unwitting victims could have their accounts closed and face years of difficulties accessing credit, from mortgages to mobile phone plans. This is because banks may record a marker against their name on the CFAS National Fraud Database, which is checked by hundreds of other banks, insurers and telecoms companies. This marker will last for 6 years unless successfully challenged, and as our investigation uncovered, finding out whether there's a marker against your name can be very difficult. When it comes to enlisting potential mules, recruiters or herders target young people and desperate job hunters with offers of easy money to work from home. They may recruit in person or advertise in local papers and online, using phishing emails and social media platforms such as Facebook, Instagram, Snapchat and X. Their only requirement is a UK bank account. The key phrases to watch out for include flip money, instant cash, brand-specific hashtags like PayPal flip, and job titles such as money transfer agent, local processor, or transactions analyst. Once recruited, the mule receives funds into their account and either withdraws it or sends it on to another account, taking a cut as commission. They may think it's entirely legal, Herders may even take time to build trust first, for example by falsifying documents and websites to pose as a legitimate overseas company and pretending they need to use a UK bank account to send money to a non-existent client or supplier. Inexperienced investors can be vulnerable. For example, one victim told the Financial Ombudsman Service that he saw an advert on social media promising a financial incentive for signing up and adding funds to a cryptocurrency exchange. What was presented as a risk-free way to earn referral bonuses without investing his own capital eventually led to the victim having his account closed and a CFAS marker against his name. Rebecca Craig, a solicitor at Tenet Law, has worked with the University of Birmingham to produce educational videos on fraud. She lists alternative strategies, including fake competitions and inheritance scams, where money launderers steal enough information to take over victims' bank accounts or pretend they need to transfer money through their accounts for administrative purposes. Scammers may pose as representatives of deceased individuals and claim the victim is due a large sum of money, she says. They will be asked to provide personal information and will receive and transfer funds under the guise of covering taxes or legal fees. A sinister evolution in some romance frauds is to manipulate victims into becoming money mules. Scammers create fake online identities and target people on dating websites, social media and even gaming platforms with the intent of stealing their money. Experts say there is a clear link to coercive control as perpetrators try to establish an emotional connection quickly, fabricating family tragedies and illnesses before asking for money or gifts. Scammers may claim they have urgent bills to pay, travel and visa costs, or medical treatment to cover. The worst will also turn their victims into money mules, either by asking for direct access to their accounts or convincing them to send money as a favour. Which is aware of cases where romance fraudsters pretended they had problems with their own bank account, or asked victims to let them transfer funds in crypto exchanges for tax breaks. Alarm bells should ring if you or someone you know is dating someone that never wants to meet in person and claims to be working abroad, such as a soldier, medic, or oil rig worker. They are likely to make excuses to avoid going on camera, although this could be about to change. Fraudsters are becoming ever more sophisticated in the ways they use money mules. For instance, advances in artificial intelligence have sparked a rise in deep fakes, which has helped romance scammers appear on camera to reassure victims. Other evolving trends include impersonating bank fraud teams or other officials to trick older people into opening new bank accounts. Younger people may be given gift cards to buy electronic devices, which criminals resell on online marketplaces. Europol recently reported that vulnerable migrants fleeing war zones such as Ukraine are also being forced to open bank accounts for money laundering. Meanwhile, CFAS has reported an increased use of AI to create fake identities, enabling criminals to bypass security checks when they open bank accounts. After all, why take the risk of recruiting real individuals to move your dirty money when you can use synthetic identities to move it yourself? Major banks have given the public little reason to trust that they've got the problem of money laundering under control. In December 2021, NatWest was fined £265 million after pleading guilty to charges of anti-money laundering failings. It was the first time the Financial Conduct Authority had pursued criminal prosecution under the UK's money laundering regulations. The city watchdog described a catalogue of failures in the way NatWest monitored and scrutinised transactions associated with a commercial customer who ran a jewellery business in Bradford. Flexing its regulatory muscles rather than going via the courts, the FCA issued a £64 million fine to HSBC just a week later. This was followed in December 2022 by a £108 million fine for Santander and £4 million for Al Rayyan Bank in January 2023. In another industry first, in October 2023, the Payment Systems Regulator, PRS, published detailed data about authorised push payments, APP, when someone is tricked into sending money to a fraudster posing as a genuine payee. It named the worst firms for receiving fraudulently obtained cash, revealing those with weaknesses including poor detection of mule accounts. It showed an alarming gulf in the levels of exposure to APP fraud across the industry. Newer and smaller payment firms tend to receive disproportionately higher rates of cash from APP fraud than larger, more established banks. while the worst two firms, Clear Junction and BCB Payments, both offer account services to other financial institutions and regulated companies, not to individual consumers. The PSR has made it clear that they still bear regulatory responsibility and should ensure partners are managing risks and monitoring transactions effectively. Others, such as Revolut and Wise, do provide services to personal customers directly, and were both far more exposed than even the worst of the big banks. In late 2023, the FCA published a review of payment firm systems and controls against money mule activity. It identified areas for improvement across the board, including onboarding of new customers and monitoring payments between accounts. It found inadequate due diligence checks at some firms, including failure to investigate the reasons why multiple customers use the same device with no clear reason, which is common in cases where the mule has sold on their account details to a mule herder. Other shortcomings included firms relying too heavily on machine learning models. This means historical data is used to predict typical behaviour, which is of limited use for new customers or accounts with limited transaction histories. It also drew attention to an over-reliance on monitoring outbound transactions instead of inbound payments. This means some firms are unable to detect mule accounts or do so too late after the stolen funds have been sent on. Richard Emery, an independent bank fraud investigator, agrees that the industry must focus on real-time monitoring of inbound payments. He says, "I've long felt that the beneficiary banks have been getting away with it. Whether it's mule accounts or other accounts being used for fraud, I believe they are failing significantly." Emery is calling for a 24-hour payment delay on all high-value payments made by personal customers to new payees, telling Which that nobody has come close to convincing me that this would be truly inconvenient for consumers. The good news is that banks have never been more financially incentivised to tackle fraud, thanks to a new mandatory reimbursement scheme for APP fraud that comes into force on the 7th of October 2024. Once implemented, firms using faster payments will be liable to compensate customers for fraud losses up to a maximum of £415,000. Both sending and receiving firms will split the costs of reimbursement 50-50, although they can make the victim pay £100 excess per claim unless they are considered vulnerable. Customers are expected to exercise a minimum degree of caution, known as the Consumer Standard of Caution, and to report claims within 13 months. Firms can reject claims if a customer fails to meet these standards, but they must demonstrate that the failure was as a result of gross negligence, that is, a significant degree of carelessness. The UK is the first country in the world to implement consistent standards for APP fraud reimbursement, and the new regime is expected to encourage greater investment in fraud detection across the whole industry. Raphael Mayer is the co-founder of Net Guardians, a software company that partners with major financial institutions to fight fraud. He says, "A new era of tech means banks are able to act on and prevent mule activity far more effectively. Use of AI is becoming more and more the norm." He told us that AI risk models mean that every customer has their own rules, and that with this granularity of detail about individual account holders, behavioural analysis significantly strengthens mule detection. But it isn't enough. Not least because some banks are being too slow in integrating new, more sophisticated systems, according to Mayo. He says it's quite accurate to say the UK is the money laundering capital of Europe. Technology helps the banks defend themselves, but it also helps the fraudsters perpetuate crime at a global scale much faster. An industry processing billions of payments every year should be working together, sharing information about suspicious activity, and using the best tools available to spot and stop fraud. But it remains to be seen whether they will win this particular arms race. Thank you to Chiara Cavalieri for that original article, first published in Which Money magazine's July edition. If you want to subscribe and get the magazine delivered directly to your door, click the link in the description of today's show. For more expert money advice, subscribe to our free newsletter and tune in to our weekly money podcast with new episodes that drop every Friday. This episode was produced and edited by Romana Yassin. Thank you for listening, and I'll see you next time. Goodbye.
If you're enjoying this Witch podcast, then you might also be interested in listening to other podcasts that we have to offer, like Witch Shorts. Witch Shorts is our weekly podcast that brings you a flavour of what the Witch magazine has to offer, as well as our dedicated travel, gardening and tech magazines too. Each week we handpick a review, investigation or feature that was printed in one of our magazines and written by one of our award-winning writers. We then bring it to life on the podcast. So to get a taster of what Witch members get in our suite of magazines, be sure to listen to Witch Shorts wherever you get your podcasts.